Welcome into the Crypto Bunker podcast. Today we're going to be talking about Ethereum and Bitcoin price. And what we're seeing in the markets right now is some serious volatility. And when we see that, we want to make sure that we're taking a step back and understanding the macro picture of what these charts are telling us and what the macro perspective is in past cycles compared to this cycle. And I think something that's really interesting is that this is actually playing out the same as the 2017 Ethereum Fractal on the way to the top in January. So around this same exact time in September of 2017, during the last bull run, we saw Ethereum do a very similar pattern to this going into September. And if you look at this chart compared to this chart, it's actually very similar. We saw a massive run up in around May, so it was a little bit later. It was June. We saw a crash down, and then we saw a massive run up again, right? And we ended up pretty much closing the daily at the same exact level. So let's take a look at what this did in comparison. We can see it's very similar. It basically closed the daily around the same level. It wasn't as high, but it was pretty damn close. And I mean, looking back at this, I just wish that I had known this, because honestly, these are so similar. This structure is a little bit more complex. I don't want to say complex, but maybe more professional. There's obviously billions and billions of more money that are flowing into crypto at this time. But if we just take a look at the double peak that we had, it kind of reminds me of what we had in ETH. Even the price is almost the same in terms of just like if you 10x the price. Like if you see the top here was like 409, which is 410, which is close to what the top was for, and then for here it's 390, which is like the same thing if you just 10x it. And so if you look to where it came down to around 200, I'm not going to say that ETH's going to come down to 200 necessarily. I think it might come down. Let's take a look. If it went straight down, basically we were looking at like 2,200. But I think ultimately we rise up from that and we close above, about 2,350, maybe 2,400. And then from there, we obviously have a lot of cleaning up to do. There's a support level here, which we obviously broke through this support, and now we're testing up. So realize when we break through support and then we make it resistance, we're most likely going to go down to the next support level, which again is like around 2,350. And this is a massive support. As you can see, this is like the bull market trend, 4-hourly daily closes. So you can see it was support, flipped, resistance, and now we try to make it support, but we didn't really make it support, unfortunately. So this is a really, really big deal for Ethereum, and it's no reason to be bearish necessarily. It's not a reason to panic. It's not a reason to sell. It's a reason to start thinking about buying and start thinking of putting yourself in a position to be able to buy. It's these times where you want to, find any way you can to get some extra cash in your pocket so that maybe when we do come down to these levels, you can really look to deploy some capital there. It would be really, really nice to buy one Ethereum token at 2,300 and say that you did that in the future. So if you look at it that way and you're just holding for the long term, I think you're fine. And we're really looking at basically just higher lows, right? I mean, we're looking at, where we started the bull run. This is where I considered, kind of where we started at January 1st, where we started the major run here, obviously. And if you take that bottom to this bottom, and then if we made another bottom, say it was like around here somewhere at like 2150, maybe we wick down, and then we test up. I'm gonna say, like, honestly, that I'm gonna put some bids in here, but not gonna be surprised if we wick down really quick if something major happens. At the same time, like, this could be the bottom, right? I mean, I don't see a reason why it wouldn't be, at the same time. But let's look at what happened in this same period. We came up, we broke through this level here, and then this is kind of right where we're at right now. Around these levels, we've already crashed. We're sort of coming back up, so we might have a candle that comes down here and wicks down. So what's cool about this is you can see what happens afterwards. So this is what I expect to happen to ETH. So we're like right around this level right here. And so if we did the equivalent run, which is from this bottom around 200 to 1400, was about a 7x. So if we go to 2400 and we 7x that, we get around $17,000 ETH at the top. Maybe it would be a little bit later than January 13th. But with ETH 2.0 coming, I think honestly it could even be a situation where we do have a 17K like mid-January, and then we come back, crash down, maybe to 10K, and then maybe we even take off for another leg. I would not be surprised. With Gary Gensler coming in to regulate the crypto markets, that's going to be many more institutions coming in at some point in the near future because of that regulation. So it's the opposite of what people think. Don't be scared. The regulation is actually good for whales coming in and pumping the bags because that they very much want to. Now we're going to look at Bitcoin, and if you guys want more information on this particular pattern, you can go to BitBoy Crypto and his interview with Carl from the Moon. They went over basically how this is actually playing out to be a miniature version of this entire thing. So as we can see, we had the first run up, crash down, and then we did 1, 2, 3, 4. Let's say that's 1, 2, 3, 4, and the fifth peak is lower, right? The fifth peak is the only one that's lower, so we kind of did a oop and then down. So it's 1, 2, 3, 4, 5. The fifth one is lower, and so in this we came down to the bottom of this, and so we expect to come down to the bottom of this first peak, which would be around 37,700, somewhere around there. As we can also see, we have key bull market support that we have, similar to Ethereum, where it's kind of like the start of the bull run, the first dip. If we hit somewhere, that would be around like 35. I wouldn't be surprised if we wick down to like 34 and then we pop back up to 37. I know that sounds crazy. I also wouldn't be surprised if we hold around these levels. If you check out Benjamin Cowan's channel, which I definitely recommend, you can see that we are pretty much sitting right around the 21-week EMA and the 20-week SMA, which he likes to talk about on his channel as the key bull market support bands. But this is actually the bottom of the EMA ribbons around this area, as Carl from the Moon describes it. So there's sort of a possibility that we could come down, still wick below this, and then still close above that that key level of the 21-week EMA and SMA, where it's as long as I guess what Benjamin Cowan always says is, as long as we close above that on the weekly candle, then we will be okay. So you can go to the charts, you can look at the weekly, and as long as we're like above these sort of levels around here, like 42,000, I think, around maybe 41,000, you can go to his channel. He's always updating it. Then I think we would be fine. I mean, as you can see, we came down and we went through, key levels of support here, and then we came back up through it, And so what we have to do is come back and test it as support. So when you break through support, you go through it as resistance. You want to come back and test that original support. I think that just makes the most sense for what we're dealing with right now. And yeah, I mean, I think it's super healthy actually for the market. And I don't want to harp on Ben too much, but what he would say is that it's super bullish. The longer we test the 20-week, average, the better it is and the more healthy it is. Back in this area, we actually, right around this, when I was first starting to buy into Bitcoin, we were testing the 20-week SMA, 21-week EMA like this entire time, and that led to a massive parabolic run. So if we can do that, which I think, if you look back at the Ethereum chart in 2017, it shows us that we did, in fact, after we go down to 2,400, or in this case about 200 or whatever, we come up and we kind of go sideways for a few months, which would be outstanding for people who want to accumulate for this next run, which is myself and hopefully you. So if we can do that, if we can have this play out where we go sideways around 3,000 for a few months, that would just be even more reason to believe that we're going to take off because more people are going to be accumulating. So I'm very much hoping that we can crash down to 2,400, to be honest, because I just want to get it out of the way. I'm sick of us not, following through on some of this because it's so bullish that people just want to buy the dip like crazy and they won't give up. But I think what we need is a absolutely full rinse. And so we're looking around these levels. And if you look back at some of my videos, like a month ago or so, I kind of have always been calling for this as well, for us to sort of have a healthy test back. I've obviously been a moon boy at the same time, and I'm saying to long the top, like all this shit. So I'm sorry about that. Obviously, none of this is financial advice, just to cover myself, but I just did want to show you guys, all these different charts. This is also the Bitcoin chart from 2013, this background one, along with the current chart. So this is actually the first wave that we saw in Bitcoin, and look how closely we're following it. And this would take us to down around, like 34,000, which is what I was just saying. So, and then what happened after that is a massive parabolic run. 2013. I don't know if I said 2017. This is actually this is a 2013 chart. And this is the famous double bull run for Bitcoin. So people are sort of comparing this. I'm not sure I see it in this chart necessarily, but I do see it. And Raoul Pal has referenced this many times as well. But as you can see, we did a massive blow off. I'm not sure if the time frames fit necessarily. I guess they might, to start seeing a run like late October and early November for Bitcoin. I wouldn't be surprised. Bitcoin usually moves first. Bitcoin usually moves very well in November and December. And Ethereum usually follows late December, January, February for Ethereum. So keep your eyes out for those time frames. Definitely try to accumulate through this dip. You don't need to catch the bottom. I think today would be an absolutely outstanding day to buy the dip as well. So yeah, I mean, there's a lot of stuff going on with the SEC and Gary Gensler. Like I said, I think it's bullish actually for the market. Obviously, there's just so much happening with NFTs, with DeFi, and a lot of these institutions want to get in as much as they possibly can. So just realize that they need the regulations to come in so that they can do that. So hopefully you guys enjoyed the video. If you did, please like the video, please subscribe, and have a great night.